All right, so thanks for joining me. I do appreciate it, Eric.
Thanks for having me. Appreciate it, Ed.
So today we're going to talk about gap funding and get to know you a little bit. So let's start off. Tell me a little bit about your background.
So my name's Eric Mauz with NB Capital Solutions. Went to Drexel University for engineering and did project management work for about 10 years for DuPont, big company. But along the way, right, I bought my first property as a real estate investor in 2002. So for the past 20 plus years, I've been investing in real estate here locally in New Jersey in three main counties. And in 2008, I started to educate and learn about unsecured funding and lines of credit, which is, fast forward to '08. Year later, I created MB Capital Solutions because I saw the value that the funding was having for my real estate business. And I just wanted to share it with others. So, for the past 14, 15 years, I've been surrounded by this model and helping other investors and entrepreneurs.
So where does NB Capital come from? What the name?
So MB stands for Mauz Brothers, right? It was initially started as the entity or the LLC that my brother and I were going to use for our investments, for our holds. It was just simple. Didn't say the word real estate in it, didn't say the word investments or holdings. Eventually I took it over. I told my brother, I said, nope, we're changing it to 100% owner. He's not involved in MB at all.
Is he getting a royalty as a Mauz brother, or?
I give him a high five
Yeah.
once in a while. Yeah.
Oh, that's awesome. Let's get started here, Eric. Tell me, what is gap funding?
In its simplest form, gap funding is the difference between what your lenders bring into closing and what is needed to close. So how much liquidity do I have to bring to closing? That number is called the gap. So if you're buying a property for $100,000, let's say, and the lender's giving you 80%, the gap would be the 20% that you need to bring to the closing.
So you're, like you said, simply put, there's some amount of money you have to bring that the lender's not providing, and you are bridging that gap there. That is the gap.
Exactly. Yep.
All right. So how is a real estate investor? Both of us are, flipped houses, own rental properties. How can we use this gap funding to help us through the project?
So looking back at the definition of what the gap funding is, right? The easiest way to look at how an investor can use it, or one of the most common ways, is for down payment money and for the closing costs associated with the purchase. So in the example that I used above, right, $100,000, they need 20% down. That's $20,000 in gap funding needed, plus the closing costs, whether it be taxes, fees from the lender, et cetera, that's needed, which could be another couple $1,000 depending on the size of the project. Also, during the project, the investors will have other needs for gap funding, such as possibly needing it for some of the renovations, right? If you're working with a lender that requires you to pay for a portion of the rehab before they come out and give you a construction draw, you may have to use some gap funding, some of your own liquidity and cash to be able to fund the rehab prior to getting the construction draw. Other ways that people use the gap funding is for holding costs throughout the project, right? There's going to be some utility fees. There's going to be monthly payments that you need to make to lenders. All of that can be considered gap. And most importantly, I think, making sure that you have some reserves or emergency funds as part of the gap that's needed for a project in a liquid form. It is nice as an investor to protect yourself.
So it sounds like you have a couple of gaps you're bridging here, right? The gap from a close to get me to closing, and then you're going to help me fill the gap for my construction portion, right? To get me started with those construction funds. And then even the gap of making the payment at the end of the day. So this gap funding is really wide and deep reaching here for the stuff that we can do with this money.
Yeah, absolutely. In my opinion, it's one of the most important pieces of any investor or entrepreneur.
I completely agree. And for those who don't know, I mean, I've personally worked with Eric before. He has helped me get gap funding as well. So I've been able to leverage this myself through many forms, right? I mean, I've used some of these funds to help lend that money out, right? And kind of make a return off your off money that you're, like I said, to pay interest on this. And then I just lend it out slightly higher and make a little bit more money. So we can do all sorts of things with the product that you provide for everybody.
Love it.
So how are you filling the gap, right? What are these things that you're providing to us?
So I'm going to start with a variation of that question, right? How do you fill the gap as a real estate investor? As a real estate investor, we all need tools, right? We need these funding tools in our toolbox to be able to fill that gap wherever it is, early on in the project or throughout the project. And I always like to ask the question, what tools do you have in your funding toolbox? And most people look at me sideways. I'll say, do you have a funding toolbox? And most people don't know whether to say yes or no, right? But as an investor, we all have a funding toolbox to help fund your deals. So when it comes to filling the gap, the tools that I always refer to are, number one would be cash, right? Do you have cash that you can use to fill that gap for the down payment, the rehab, working capital? Private money. Some have experience and have built up private money lenders that they use for down payment and rehab costs throughout a project. A home equity line of credit would be a good option. So a HELOC may not be the first option, but it could be a good way, once again, to have the ability to write a check to fill that gap. Unsecured funding of any sort, whether it be a line of credit, a credit card, a loan. Those are the areas that I see the most when, investors are filling the gap, right? Those are the key tools that I've used personally and that, majority of the investors that I work with are using.
It's actually very interesting. That's how I got started, is the home equity line of credit, right? That was my first flip was funded by my line of credit that I had on my apartment. That was my toolbox, right? I mean, I had some money at the time, but certainly not enough to get a flip done. So we used that money. And then as well, I used a credit card to help carry it along the way as well. And then some cash. So that's definitely a good explanation of the toolbox. Everybody thinks about private money, maybe someone lending a lot of money. Private money could just be simply your mom or dad or your friend gives you $20,000 or $30,000, right, to help bridge that gap to get involved in the process. So what is, you mentioned unsecured funding in here, right? What you said, the lines of credit, credit cards, and loans. So what is unsecured funding?
So unsecured funding is funding or financing that you obtain that's based on the strength of the personal credit, but doesn't require any collateral. So you're not putting up an asset, a house, a car, any property, or equipment for that funding. So think of a good example of secured funding would be a home equity line of credit, right? You get a line of credit in place. However, it's attached to your house, right? Your house serves as collateral for that line of credit. So if something goes bad, you don't make a payment back to the home equity line, that the bank can now go after your house, take over your house. In the unsecured world, take away the house and just think of it as fully just based on personal credit without putting up any of your assets and putting any of the assets at risk, really.
Curious now, if I don't pay this loan that I get, being that it's unsecured, I mean, it is personally guaranteed. So eventually, I guess they'll just sue me, and then would they put a lien on some personal assets that I have though at that point?
The downside, if you go negative or late on an unsecured product, because it is personally guaranteed, is it will affect the strength of that personal credit, right? They can now put a derogatory on your personal credit. Okay. So like, let's say even just a personal credit card, like you said, you were using a credit card to help fund some of your deals. If you use that and you don't make the payment back, the minimum payment, you will get a late payment after 30 days. And another one would show up after 60 days. And at that point, the lender will try to recoup whatever they can from you, but they can't go after any of your assets.
Okay.
That's the protection there.
So it's a good point you bring up. I mean, I've got a business credit card. I mean, that's just as important for me to pay as my personal card, right? That will impact my personal credit if I don't pay or I'm late on my business credit card, line of credit, loan, whatever the case is that I have.
Oh, absolutely. I talk to a lot of clients all day, and over the years, I've had a few clients that say, so if you help me get funding under my business, I don't even have to pay. And I said, look, if that's your intention, probably not a good fit for how we help clients, because they're eventually going to report a negative on that personal credit. And we know the value of personal credit as investors. across the board, right? That credit's a huge part of what you're using to fund a lot of the deals and to build up, and to leverage, right? The unsecured products are a great way to leverage based on a strong credit profile. So you want to be careful, even though it doesn't report to personal, you still want to make the payments because of that personal guarantee. They can eventually report that negative on the personal credit.
I'm really glad we had that conversation because I feel not that people intentionally don't pay, but we have this conversation of it doesn't report on my credit. I have a business card. I got $40,000. It's not on my credit. It's great. So I max my utilization out. It doesn't hurt me when I go to refinance, right? And a lot of people in this business tend to leverage very high. So, when you get to that point, you're at 40,000 and you decide, am I going to make my hard money payment or this payment, right? If you ever get to a dire situation like that, it's good to know like this payment is extremely important because it will, as much as it is not showing on your credit right now, they will report for these late or missed payments.
Yeah, absolutely.
Awesome. Well, awesome, but unfortunate for those who thought that they weren't going to have to worry about that.
Right. There are some non-recourse unsecured options, which non-recourse means it's not personally guaranteed. So they are out there, but it takes time to build up non-recourse funding, especially under the business. It takes some time, and right out of the gate on the non-recourse options, you're not going to go out there and get $50 or $100 or $200,000 of access with a business that has no credit or very little credit.
Right.
You really still don't want to not make the payment, right? The lenders are taking a risk, but at the same time, there's ways that they're going to make your life a living hell should you not pay them back, right? They're in business too.
Everybody's going to get paid eventually. They'll figure out a way. So what are you doing at MB Capital Solutions? How can you help me, acquire some sort of credit or capital?
So at MB, what we do is we specialize in helping real estate investors and small business owners acquire unsecured revolving lines of credit that you can use for any part of your business, right? We talked a lot about real estate investors. So in this case, the unsecured lines of credit can be used towards the down payment money, can be used for rehab, everything that we talked about with gap funding. And it's, when you talk about really what we specialize in, I always say it's opportunity money. This is the funding that you can have in place so that when an opportunity comes up, you can take advantage of the opportunity and not miss out on the deal due to lack of access to capital, to credit. Our sweet spot in terms of funding ranges is typically between $50,000 and $200,000 of access. Once again, unsecured, going to be based on the strength of the personal credit, and then the age of the business will dictate what options a business owner would have, based on whether they have a brand new business, which we can help, or a business that's 5, 10, 15 plus years old.
So what you do is you work with other lenders, right, to help acquire. So you know how to walk through the process basically to get people that line of credit. From my experience, right, working with you, as I've said, I have Eric has helped me get business lines of credit. So you're helping us with the application and all of these sort of things to basically you're holding our hand through this process.
We call ourselves funding strategists, right? We're going to help strategize with our clients so that you can approach the right lenders in the right order as a real estate investor, as an entrepreneur, to acquire multiple revolving lines of credit from the best lenders that are available for you. So we are not the lender, right? We help you approach the lenders in the right order to go out there and get 50, 100, 150,000 plus in access.
Like myself, I'm not we do have an arm here that does lend a little bit, but we're mostly looking at it on a deal by deal basis to say, we believe that not all lenders are right for, like, you don't use the same lender for every deal potentially, right? One lender might be better for this deal, for that deal, which is kind of like what you're saying, right? You guys know the strategy of the direction to go on how to acquire the best financing for the business. So
yeah, especially for the real estate investor.
Right.
Banks don't like us. Banks don't like us as investors. We are high risk in their eyes. You need to make sure you're working with not only the right lender or the right bank, but at that bank, working with the right person who understands what we're out there doing
Yeah.
so that they can position it for underwriters properly.
Thing you had mentioned about earlier, I forget what you call it. It's like having money ready. What do you call it? It's the
It's opportunity money.
Opportunity money, right? So what I try to tell people when I educate them about you is there's this guy that I work with. He does gap funding, but talk to him now. Don't wait till you need it, right? Because it takes more than a week to get this, right? This isn't like you can go and get this money and I have it in a week later or 2 weeks later, right? So tell us about that process so we're prepared to be ready to acquire these funds.
Yeah. So Ed, what you're doing on the secured lending side, the hard money side of things, is you're helping someone get funding for a particular project. So they have to have a project in place for a hard money lender like you. They have to have a project so that you can help get the funding tied to that project or against that property. Where we come into play is I want you to have the lines of credit in place before you need them. So you want to get a line of credit in place because it's not project specific. It's based on your credit. It's based on the age of the business. You want to have the line of credit in place prior to needing it, because if you need it to close on a property in 2 weeks, you may not have either all the lines of credit back or even one line of credit, because most banks for the unsecured products could take as short as a week up to 30 days. So you want to make sure that you give yourself enough of a time frame to put them in place. I'd rather you have the line of credit in place 3 months early versus 1 day late.
Right. That's a fair point. And with the line of credit, typically you're not paying on it as long as you're not using it. So why wait until you need the project? You
Right.
Go get it now, because if you're not using it, you're not paying for it.
Yeah. And banks don't want to give you money when you need it. Think about to all the financial crises over the years. Banks tightened up when that occurred. Banks stopped lending as much, started lowering approval amounts, changed interest rates, shut down lines of credit over, in 08, 09, $2.7 trillion in lines of credit were closed out because it was a huge risk. They were scared that we didn't know what was going to happen in the financial world. So if you had a line of credit in place at that time, it was at high risk for being closed. I mean, my home equity line of credit was closed. That's why I try to be careful with even the equity in my houses with the HELOCs, because the bank has control with the HELOC. They could close that at any time if values drop drastically, and that's what the reason they gave. Values in your area drop. I lost access to $94,000 a day after I paid it off. So I got the letter in the mail the day after the funds hit. It's a big risk, right? So that was huge. As an investor, like that was good access that I had sitting there. I lost overnight, and it wasn't my fault. The values in my area really didn't drop all that much. It was a weird situation for that time frame.
Right. Yeah. When you're dealing with national banks, they're not too concerned. They're not looking at it necessarily, by pocket by pocket. They're taking a general approach of it to lower their risk across the board.
And that's another key point. Since it is credit based, right? Our lenders are looking at B+, A+ credit profiles. We help. Another part of where we're creating value for our clients is helping position their personal credit so that it's in an optimal position to go out there and get the access, right? So we strategize a lot with the clients. I'll wait an extra week, an extra month, an extra 2 months if it means helping them put themselves in a better position to go get an extra $50,000 to $100,000 of access.
So I don't want to call you credit repair, because I don't think you would ever really say that. Maybe you would, but I do put people to you in a situation who aren't also prepared, right? Because I know that as part of your process, we worked together. We went on a Credit Karma, I believe. We looked through my trade lines and, when things were paid and this and that you're able to say, hey, Ed, look, like you pay your bill on the 1st, but really they present the bill on the 15th. So now it shows that you've got a utilization. Maybe you pay that off on the 16th, right? Or the 14th
Right.
before it reports. So that way you have less utilization, that you can start to help educate these guys on how to manage their credit to help them be in that best position.
Yeah, exactly.
So you don't do credit repair, right? I mean, that's not.
No. I shy away from credit repair. I don't want to be a credit repair expert. Depending on what someone has going on in their credit, We have resources that are certain niche type, credit repair businesses or experts that do certain things. Like some can clean up inquiries, some are very good at cleaning up the nuisance late payments or unpaid collection accounts. Very few are good at removing major things like bankruptcies. Like that's always a bigger one. But there are a few out there that can do it. So depending on what a client has going on, we're going to put them in touch with the right resource. Just being proactive for long-term success with their credit and their business.
So if I don't fall into that B plus A category, I mean, I can still reach out to you and you'll guide me in the right direction. Might not repair my credit, but guide me in the right direction, with your strategies to help people out.
Exactly. Yep. Depends what you have going on. We can take a look at the credit and then help create that game plan. For me, it's always about co-creating. Whether we're co-creating an ideal credit profile, right? We need your input. We need to know what you have going on. Are you in the middle of a deal? That's why your credit cards are, highly being used, and the deal's going to close. You're selling it in 30 days or you're refinancing it in 30 days. So then we can strategize on what's the best lenders or the best cards to pay back to maximize your profile to go out there and get some business funding. But we'll strategize with you. We'll help you. We'll hold your hand along the way.
So Eric, is there anything else that you feel that we should know, either about yourself or your business, that can be helpful to us?
One of the things that differentiates MB is all of the advisors on my team, 3 of them are prior clients. So like our job, we understand what the real estate investor is going through. We understand how a real estate investor is trying to fund the deal. We're not going to replace a hard money lender. We're not going to replace a private lender. We're not going to replace your own cash. We complement all the other funding tools you have in your toolbox, and we understand how to make it work together so that you have that flexibility and that opportunity money in place.
Well put. I like that. The complementing of working with everybody else. You're just an extra tool in the toolbox. Awesome. Well, Eric, thank you for your time today. We really appreciate it. If you want to let us know how we can reach out to you, and we'll also put it in the comments and as well. But how can we find you?
You can always check out our website, right? www.mbcapitalsolutions.com. There's great information on there. You can fill out, if you click on get pre-qualified, you fill out a form. It'll give you the ability to get scheduled with one of our funding strategists. Our direct line is 1-888-783-7197.
And guys, just so you know, I mean, I really do believe in bringing people together where I've personally been involved in. Like, I just don't say, hey, go talk to this guy. I have gotten 2 business lines of credit that has helped me acquire. So great resource. And even to a further point, one of the lines that I got, I was looking to increase it, and I was able to reach back out to Eric, and he was able to help me increase the line. So sometimes you think some of the stuff is really simple, and maybe people are smart enough to sit there and figure it out and do all the work. But Eric is here. This is what he's doing every day. He's able to help us save time on our end and bring us through the correct maze kind of to get to the end in the quickest way. So Eric, thank you, man. I really appreciate you taking the time and coming on today. And we'll be in touch soon.
That's great. Thanks, Seth.